Ladies and gentlemen, dear professional and novice global macro traders, welcome to my lair in St. Bart's. Welcome to what is today? Do you know, I actually have no idea. Is today Tuesday? All I know is it's the 22nd. No, it's Wednesday. There you go. Days and me. All I know is that on this day, I have been a grumpy bugger all day. Just can't recover from, it's not even a sleep deficit. I'm just going to bed too late. 1 o'clock. Again, I'm starting. Oh my God, it is 10 past 11 in the evening. And by the time I get up and I make my juice. Have I told you, if I bored you about my juice? I'm on a challenge to have an avocado a day and a cucumber. And then I've got my, have you seen that thing doing the rounds? Pumpkin seeds are the greatest concentration of protein you can have. I'm not whisking, I'm grinding. Love that word. I'm grinding my pumpkin. Oh my God. I grind my pumpkin in the morning. I grind it in the kitchen. And of course, you know, I've got the flavonoids. I've got the blueberries. Oh, and I put 4 raw eggs into the juicer. Some protein powder, collagen, of course. Liquid vitamin C. You need that with the collagen. What else? Water. But it's the grinding of the pumpkin seeds. Check it out. Pumpkin seeds, I think, has 32 grams of protein per 100 grams or 100 milligrams or whatever. And then copious amounts of coffee. I've run out of my MCT, my coconut. And then I just find myself sucked into the thankless task of offering insight into what I can only call it the rabid marketplace of Twitter. Why do I do it? And it's a combination of young kids who are enthusiastic but clueless. No one listens. We're going to discuss it. It's Schrodinger's cat. We exist in a superposition of insanity. Anyway, it may be late, but I can't tell you the relief that I have to finally sit down with you all and parse the rhythms of global markets on this day. Parse. There's a word I like. And of course, actually, I'm still, my words are still coming at you 10 a dozen. I have to slow it down, message to myself. Yeah, I'm reflecting here on the vast chasm of time that I'm going to try and fill. Not helping, or helping. Helping is this blissful state of not receiving any economic data. Do we really need it? I wish there would be a reappraisal when the government finally turns the lights on again. And I wish markets could say, you know what? I think we prefer not knowing. We all want to know, but it's better not to know. And again, that's going to be a recurring theme. Wow, I'm developing themes for tonight's show, or the morning show, or the afternoon show. The numbers, you keep coming back. Thank you. We're definitely around about 2,000 inquisitive souls. So, not policy signals. We didn't really have any Fed heads. Do you know the nonsense I've got to wade through in terms of looking for market commentary, trying to make sure, because again, let me finish sentences, to make sure that I don't miss anything important. And that's changed from my modus operandi because I typically wanted to go through the trading day and miss the important things and then just reflect on it at a different moment. You're never going to make the right, like just knowing. I didn't want to know. You don't need to know. Knowing is the worst thing that can happen. So no, I don't think I've got any economic data to dissect. Today, however, was a curious, it was a professional day. Not a data shock day, but a day of housekeeping, rather dramatic housekeeping, a kind of Freddie Mercury, I want to break free. I won't sing it to you, but you know that video where Freddie's got the wig on, he's cross-dressing. Does a cat get sucked in the vacuum cleaner? I don't know. Some cats died today. But we'll come back to the cats. Oh, and I got fan mail again. Thank you. I love fan mail. And so there I was talking about varicose veins. And actually I was on Twitter today. I was just so exhausted by just I wrote something like, hey, my name is Hugh Hendry. I live in St. Bart's. I work hard. And let me tell you something that I've never done in my life. I've never anonymously attacked or tried to cast aspersions over someone's character. I'm fed up with people doing that. They say I'm a drunk. I mean, you live by your sword. I play a game of the acid capitalist. You got to get high to see the future. Elevation doesn't necessarily imply the drugs, but it's a game. Someone very wise in the business of social media was telling me that you have to lean in, that the audience tells you who they want you to be in. And my audience very much wants me to be some kind of crazy cat, but this cat refuses to die. But I was conscious that here I am trying to take the higher moral ground, but at least I wasn't anonymous. But, yesterday's show, I was calling varicose veins, and forgive me, I just refused to accept. I don't even know his name. I was talking to a young software kid today in Bar Select in Gustavia, which is a beautiful, beautiful bar. And he's like, would you call him varicose veins to his, on stage to his face? I'm like, well, yeah. He's like, that's really rude. Oops. But I was like, well, I called him a penis last night on my podcast. So, got to be careful, Hugh. Anyway, someone, I don't know their name, but they hit me up saying that they were, I think in Sydney, and he teaches there periodically. He gets money from everywhere. He's a penis. Stop it. But yeah, they were taught by varicose veins. Okay, move on. Okay, gold. I'm boring you all about gold. And gold continued to fall. Was gold the top cat that died today? Definitely testing. Today felt like we were testing risk appetite. So yeah, gold took another big fall, and markets. I mean, the charts on markets, the immediate, when you look at markets, I think they were, S&P was like maybe down 0.5%. The tech stocks down about 1%. Blah. But, gold futures are down about 6%. And I think mostly in relation to yesterday, steepest one-day drop since 2013. And they slipped again today. So biggest decline in 12 years. And that's interesting because I was playing back the show from yesterday, trying to work out what I said. And I began to make a request. And I didn't finish the request. And it was a request to any professional investors that tune in and they have a Bloomberg, because Bloomberg offers you a model. What is it? What is that model called again? I thought I had it written down somewhere. But it is a model that you can plug in an index like the S&P and, one day 99% VAR type thing. And I would love to know stock constituents that were having VAR explosions each day. Can't imagine there'd be that many. Maybe I'd be surprised, but that's what I was meaning to ask for. But let's discuss that further. VAR. My ex-wife is called vari, spelled with the V spelled with an M and an H. But it's a risk system that looks back and is playing with with averages, average price movements. That would be price variance. In another word, that would be called volatility. And typically, gold could move like 1.5%, 1.7%, decimal points. I hate them. So that drop yesterday of 5.7. You would take 5.7%, you would divide it by the kind of what the model says on the look back, and that's like your VAR model. Concentrate, Andrew. Clear your head. The VAR model is saying, hey, going into tomorrow, the best guess that we have is that your gold position in your portfolio is likely to move up or down by 1.6%. And you might have 10 or 20% of NEV in that position. 20 would be up there. And if it moves 1.6%, that's going to move your NEV performance by about, what would that be, about 30, 35 basis points, a third of 1%. And so the movement yesterday, if you had 20% in gold, your fund may have been down 1.2%. Anyway, yesterday's price decline divided by what the model was suggesting as it looked back at all the days, going back 250 trading days in the past, that 3.5 that's what they call a 3.5 sigma event. I think that's what they call a sigma event. And so what we saw in gold, that price movement, I'm still thinking about that position, the 20%, and saying that's quite, oof. If you're really going for it, actually, 20 would seem to be kind of what you should have as a minimum. You're in it to win it. So I just said, 20 minimum in gold. So when I was in it to win it, investing in gold very heavily in 2003, I was leveraged, so I had 100% of the fund's assets, and I was borrowing money to buy more. So imagine how I would have felt on a day like yesterday. But that's why I made 50% for the calendar year 2003. These are events which happened such a long lifetime ago, when your parents were probably your age today. So under normal risk model framework, you would expect a day like that. Like, you would expect that like once every 4 or 5 years. You'd expect gold to fall 6% and further fall today. That's like a once every 4 or 5 years, which is to say it's rare. And so its volatility has exploded. And that normally marks a top in the price range for the time being. And I say that because professional investors who do use this. I used it. I remember the 2-3 VAR days that we would have. I hated those damn days. But the pros will kind of reduce their position because they're like, life just got weird. Life through the goggles of the models just got harder to explain. The price no longer conforming to some notion of rational, reasonable expectation. So that was the big news of the day. And yeah, and it's coming back to me, the Bloomberg tool, the VAR-based outlier detection function. Sound like a Bloomberg salesperson. I think it's RVAR. Go, baby, go. Risk and volatility analysis. If you've got that, I'd love to get in touch and share with me stocks which were on the outer limits of their risk and volatility analysis. That would be something that we could engage in. We could vibe in these shows. But I mean, given no one even sends me fan mail, I guess I'm not going to hear from you, but think about it. Netflix. I am paying a considerable amount for Netflix, and I never watch it. The only thing I ever watch, and I'm not a petrol head, but the only thing I like watching is once a year, is the Formula One documentary. I think that is amazing. It's funny with sport that I would never consider sitting down. Can you imagine? I can't think of anything more boring than watching a Formula One race, or indeed a soccer race, or a baseball game, or an American football game. Yawn, yawn, yawn. And yet, TV or media revenues are absolutely going crazy. And before doing this, actually, I was watching on Canal Plus, I watch it in French, it's called the résumés, the highlights of the European soccer. And that gives about 12 minutes. And to be honest, I hate that expression, to be honest. Does that suggest I'm dishonest? I hope not. But even 12 minutes seems a bit long. Netflix was down 10% today. Oh! And again, I only discovered this as I sat down to try and prepare this at 9 o'clock tonight. Earnings reported amazing revenues. I tell you, the bullshit I've got to wade through in terms of financial journalism reporting on these things is hideous. They missed earnings. And apparently they missed earnings because they got a tax bomb out of Brazil. Brazil, Lulu, aligning themselves with Brazil. Is it just for the soybeans? I think it's a mistake. And more, I want to look. I love Brazil, but yeah, really don't like your politics. Get rid of Lulu. But big companies. This is I think a $500 billion market cap. They don't do profit warnings. You finish talking to Wall Street analysts, I think about 6 weeks before you print the number. And so you kind of know. So something really has gone wrong in the intervening 6 weeks for you to print to miss your estimate. It's a big reputational blow, which is why stock prices move a lot. But yeah, the things they don't tell you in shady financial journalism. The amazing growth rate in revenue, well, it's kind of gone from accelerating rates of growth to decelerating rates of growth. And the current growth rate kind of confessing to having been helped by the weak dollar. Your dollar has been down about 9-10% on the year. And I'm an investor. Hello, bonjour, ça va? Do I really want to pay? Do I really want to pay 12 times sales for a company whose rate of growth is slowing down and has been assisted by a weak dollar, and a dollar which is likely to appreciate? I don't think so. And then when you look at it, the stock price chart, it peaked in June of this year, and it's been, the market's been making new highs, not Netflix. Stocks have these silent screams if you're bothered to watch. And Netflix has been screaming that this earnings miss was going to happen. So down 10%. And it's about, I think, 15 to 18% above its 1-year moving average. So I think it's going there. It was last there in May of this year, and prior to that, October of 23. So mean reversion is a recurring event. You Netflix bulls, I think are going to get the opportunity to buy it again below its 1-year moving average. And we had Tesla, and they had earnings, and I think they exceeded estimates, but the price, I think, was down about 3-4%. And I have mentioned Tesla several times. I've mentioned in the context of it's a again, Steinbeck, the novelist, the monster has to grow or it dies. Like, Tesla has to be making new all-time highs or it will die. Me and the pros, we just don't get involved in Tesla. Why? Because the historic volatility, the average, but that daily price movement is enormous. It's like 50, I think the 1-year look back is about 53% historic daily vol, not historic. The vol was 53% on the look back. The implied vol was 59. Yeah, unless it's making highs, trending positively, there ain't much you can do as a pro there. I mean, you could try and extract the vol and take a yield, actually earn a weekly income by having the covered calls. But you can't do that. Yes, you can convert it into income, but you have to be comfortable in the downside price risk, because you're effectively owning you're owning the stock, and then you're selling the upside. You're saying, yeah, ASML is a great one. It had a series of profit warnings earlier this year, fallen. I think it came back, retraced to the 1-year moving average. Valuation high, but not excessively so. And you're like, yeah, 1-year moving average, volatility's gone crazy, it's back at the 1-year moving average. And you know what? I'm happy owning it, and then I'll sell the short-term calls where people are looking for it to regain its bull market. I'm like, yeah, maybe it just goes sideways. And so I'm going to collect, I'm selling options, and I'm going to collect that. But I'm taking ownership of the stock. And if the stock actually goes up, they'll be called away from me. And I'm like, you know what? I'm fine. The next week, I'll buy the stock back again. But the key to that strategy is I'm happy owning shares. I'm happy having like a $20,000 investment. I'm not worried about it falling. If it falls, I'd buy more. That is not the case with Tesla today. And again, it's, public sponsorship, government sponsorship. I kind of knew about this, but I couldn't actually express it. But the US government was awarding Tesla a credit a credit, like cash. Hey, mister, here's cash of $7,500 per vehicle. And that's gone. I can't say Tesla chose me to the bone. I'm just saying, needs to move on, needs to start trending, or that beast dies. And I think there was some whisper. Again, I've been in Waymos, driverless cars are the future. Still don't know if Elon's technology is the right technology. He was saying something. They still got not many cars they're driving around only in Austin, but they have a full backup team in the office of humans who are actually watching and driving the damn thing. Doesn't sound like a driverless car. And he didn't have many good things to say about that. And then robotics, rare earth, magnets, don't know. Anyway, enough about it. I do not want to talk about Tesla. Let's talk about the bush. Steady. Let's talk about the bush fire. I learned so much from Ben Benjamin, capital misallocation. He's kind of funny. He's just like the son of David Levinson. Bush, bonds, utilities, staples, healthcare. And I think it's a play on the bird in the hand versus two in the bush. Two in the bush, I think, would be the bonds and utilities. And the staples and the healthcare. It would be all of them. What? Bush is a new term, as you may have guessed. Bird in the hand versus two in the bush. The two in the bush, that got destroyed today. So the two in the bush really is just overvalued, ridiculous momentum stocks. Like an example, I can't recall its name, but the Sam Altman sponsored SPAC, which is now, I think, fully listed. And it is involved in that 3 Mile Island and taking on the nuclear reactors to provide energy for data centers. I think you need a nuclear reactor for every 1 giga data center. Imagine that. And that stock has no earnings, and apparently it's going to roll out nuclear power stations. Do you know how expensive nuclear power stations are? Do you know the profound uncertainties in building them to cost? Just in building them? The time lags? And Sam's kind of busy, but it doesn't matter because it's a narrative stock. It's two in the hand, two in the bush. It got absolutely smoked. Netflix, I guess, is a two in the bush type stock. So today was interesting because you wouldn't know it to the general public. Today just looks like a blah day. There was more news bombs on China-American trade tension. If they're not going to sell us refined rare earth metals so that Elon can build his robots. You need the robots. You need the magnets for the joints for the robot. If they're not doing that, then we're not selling them. I don't know. They don't have Microsoft. They have many things. They don't have Microsoft. Microsoft's like, can you keep us out of it? So you're like between 0.5% and 1% down for the indices. But if you could see the bush, if you were in the bush today, wow, there was a massacre. And I was oblivious to this until Ben sent me a WhatsApp message saying, "Whoa, have you seen today?" I think he was short the two in the bush stocks. And so he felt good. And again, as I waded through the bullshit trying to make any sense of today, do you know, we had I mentioned this, the IMF were in Washington, was it a week ago, 10 days ago? You know that the fund lifted its 2025 global growth forecast to 3.2% and lifted 2026 to 3.1%. Again, I don't care. 3.1% is not going to happen. Like 2026, the growth rate is going to be the same as this year. Call me cynical, but I don't think that's going to happen. And then I saw Robin Brooks, who's kind of smart writer. And he's like, yeah, no, it was like all the smart people got together at the IMF and decided that the gold thing was overdue a correction and was completely mad. So that's why gold peaked. I mean, Robin, shut up. In another world, you might say, give me a fucking break, mate. I hate that term, mate. But I mean, if you use it, fine. It doesn't sit comfortably in my vocabulary. So today was a riddle. Some stocks died in plain sight, and yet the index barely blinked. A storm of dead people. But the cat. Why do I keep talking about the cat? The cat. Is the market the cat? The market's still alive. The market's still kicking. Of course, talking about how do you pronounce the German? Let's go quantum physics. Schrodinger's cat. The poor cat. I hate cats. Sealed in a box with a vial of poison. Supposition is the cat is neither alive nor dead until some busybody dares to open the lid and boom! A cat, a radioactive atom, a Geiger counter, a vial of poisonous gas. If the atom decays, and apparently that's a random thing, that's a random quantum event, atoms are decaying randomly. Atoms are decaying randomly. Kind of sounds like we're going back to the VAR model. And we're looking at randomness and we're trying to map randomness through these models. If the atom doesn't decay, then the vial remains intact. So it's a puzzle, it's a riddle. Didn't I say today was a riddle? Today was a riddle. We had stocks dying in the plain sight of a market that was seemingly functioning and seemingly okay. The vial remains intact. The cat lives. The atom decays. The Geiger counter goes, what was a Geiger? I was going to make the noise, but that doesn't sound like a Geiger counter. And get the cat, the damn cat. The cat's dead. I've told you about I'm sure I did tell you about when I was 10 or 11, being taken by my working class, hero-like parents, taking me on aeroplanes to the Costa Brava in Spain, collecting the beer bottles and the water bottles and taking them back to the shop and getting some pesetas before we had euros. Fast forward, I don't know, like 8 years later, and I'm at university, and I'm in the Greek islands, and I'm carrying Milan Kundera's The Unbearable Lightness of Being, and probably a little bit of Hayek. I read Hayek on Greek beaches. Go figure. But yet, is the cat alive or is the cat dead? The unbearable lightness of being. Who knew Milan Kundera was into quantum mechanics? And it's fun. I love this. I love this shit. How possibility turns into reality. the moment it's observed. And I'm digesting and I'm dwelling upon that. What did I say to you? I said that when I was an active risk manager, I wasn't actively seeking the day's news, the day's events. I'm still not. I just a late night activity that means I'm missing my bedtime. I thought that was just a quirk of my behavior. Turns out it's the unbearable lightness of being. It turns out I'm a quantum scientist. I don't want to know. It took me the longest time with my analysts. Don't tell me the answer. Don't tell me the earnings. Don't give me certainty. I needed uncertainty. And it's not famous, but the story that I often recollect is I hired a genius kid, wonderful, very, very astute, Turkish, a graduate from the best schools in the US. Couldn't get a visa. And a legendary investor tapped me and said, you should take this kid on. And he was good. And he slaved over a biotech stock. We were talking about the portfolio. I'll come back to the portfolio in a minute. The new Yᴚ portfolio. And we were putting some pharmaceutical biotech stocks. But back then, this kid was convinced he had seen the future. And I allowed him to convince me. And a position that should have been 30 basis points was more like 300. It was 3 percentage points of NAV. And it stumbled with its clinical data and it got absolutely trousered, 40%. Imagine that. I think I dropped 1.5% of my NAV in a day from a stupid pharma stock. We opened the box and we killed the damn cat. I didn't want the observation. For me, my modus operandi is I want to exist in, they call it what? They call it the wave function. In that cloud of probabilities, in that fuzzy cloud of all possible states, at all possible states all at once. That's the eclectic acid mind. A fuzzy cloud of all possible states occurring all at once. It's how you should think about investing. Markets are a wave function. Everyone is eager to observe the system. But you open the box and the wave function collapses. What does that mean? There's not all possible states happening all at once. There's only one state, alive or dead. When you open the box, the cat is alive. Meow. Or is dead. No meow. Let me put that in my language. So the fuzzy cloud. Markets can crash or soar. Inflation could be tame or raging. Gold is going to the moon. Gold is going to be capitalized the same as the equity markets, which I was getting close to, or it bleeds. Every day we're trying to price every possible universe all at once. And just praying that the wave function does not collapse. Praying that we don't get markets. Here's something for you. Markets don't want certainty. Certainty's a killer. So acid capitalists, we prefer uncertainty. That's why I was saying to you, we've got rules. That's why I said to you, I had these buckets. God, I'm going to buy a bucket. I'm holding an imaginary bucket. Oh, Oh, this bucket's really empty just now. Why is my bucket empty? Because of the rules. Most things are trading at deviations from the 1 year moving average. Netflix down 10%, likely to fall another 15%. So for sure it's going to have a 25 to 40% price correction. We'd kind of like to avoid that. The buckets were kind of diversified. We're trying to consider all states of mind occurring all at once. I said to you, I filled my bucket with Bitcoin. We're only $7 or $8 above the 1 year moving average, and it's trending, okay, not been trending the last 3 months, but trending higher. Schrodinger's market, 1 foot in boom. Boom, 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 Bobby Digital. 1 in bust. My shoes are smouldering. Bust? Where's that foot? In bust. Ladies and gentlemen, there was an omission. Coughing again. There was an omission yesterday. We have to add something to our portfolio. I was remiss. Again, I'm lazy. I'm trying not to look. Lazy or slothful? Anyway, drum roll. We are adding the TLT to the active risk book. Boom. TLT, the spot price, is above the 1 year moving average. And they're now, I mean, there's a trend and it's positive. That trend, let's just say that trend is young. Given the trend is young, let's put 25% of NAV. So now we've actually got and yeah, really, they should be 50%, if not 100%. But given the history, let's just start. But and my God, it looks like Albemarle, the lithium stock. Like that one. Again, TLT and Albemarle. TLT Bitcoin. TLT leveraged short yen. That's a harder one, but we're talking about all possible outcomes occurring all at once. You see how you start? Hope you see how investment, again, is this creative, philosophical, delicious riddle. You know, inflation, dead and undead. Economic growth, resilient, exhausted. The US budget deficit is going to be resolved. Tariffs, etc. No, it's going to have a recession. They're going to bail out. We had another insolvency in the auto loans sector. You know, dead or alive. The gold collapse. Last week, we kind of opened the box. Everyone decided that the cat was immortal, that the cat couldn't die. Central banks were, the Chinese central banks, every central bank was buying gold. With the US economy, with the IMF upgrading global GDP growth to, what did I say? 2.5. What did I say? 2.5, 2.6. I wrote it somewhere on my computer. Where are my notes? IMF, where are you? 3.2. 3.2. 3.2 global economic growth. In the US, that'd be something like 2 something. And yet you've got 6% budget deficits. Gold, the markets decided that that the cat was immortal. The dollar's finished. Fiat is finished. the Fed's going to cut interest rates. Hey, we were talking about interest rates going down to less than 1% in the next 12 months. Gold, vertical in the ascent, divine in the narrative, untouchable. Except the attraction of gold, the normal attraction of gold, is that quantum haze. That cloud of many, many possibilities, not one. The notion that gold could be alive or dead. And over the weekend, at the beginning of this week, we opened the box. What I'm not really saying very well. Let me think about this a second. Gold was poisoned. No, gold was, let me say it again. Gold was poisoned by certainty. It wasn't poisoned by inflation or, the dollar's having a bit of a rally. It was poisoned by the certainty of the marketplace. The minute you observe it, when traders start saying, 3 sigma move, VAR breach, you're collapsing the wave function. And the price has to decide, alive or dead? 3 sigma move, VAR breach, dead. And so for now, gold is dead around the 4,000 mark. That cat's looking more like taxidermy than transcendence. That cat is looking more like taxidermy than transcendence. Will I say it a third time? No. But in this confluence of unlimited outcomes occurring all at the one time, maybe don't write gold off. Don't write the obituary just yet. Even in quantum markets and in markets, collapse can be temporary until it's not. The gold box is open, but the gold box could close again. Markets operate best when the box is closed. That's when the believers return. And in gold, they start whispering the old creed. They can't print gold. And I'll have to deal with the insufferable lunatics on Twitter again as the cat resurrects. That, my friends. Okay, before I was just about to say goodbye to you, but hey, another show. We're under the hour mark. Oh my God, it's 3 minutes to midnight. And we've added TLT to the portfolio. So we've got TLT, we've got a SOFR contract. We should probably put more contracts. We should put more margin and have more in that. We're very long Bitcoin. We're very short the yen. We've got a diddly little position playing with prejudice in Chinese stocks. We've got a let's call it a half position in the Nikkei, wanting to buy more, just cognizant of it being a mean reversion candidate. We got piddly little playground things in a lithium stock and healthcare biotech. And we've got 90% of our cash in the 1 year. It's not, of course, I've been saying 4%, it's 3.6% in yield. Am I missing anything? I don't think I'm missing anything. Maybe one of you wonderful, generous, kind people could turn that into a portfolio and let's measure its performance. It will only reveal that I do podcasts. I do not manage other people's money. I am a provocateur. And that, my friends, tonight is how you breathe acid in a world full of anesthetic. I bid you farewell. I bid you my bisous. I bid you my French kisses rather. My French kissing I will leave for other people that I will chase around the island today, tomorrow, and the next day. But for tonight, over and out. Good night.